There's a world out there, it's a digital maze where dollars move in mysterious ways. Complex systems, rules, and regulations. The payments professor sparks revelations. No need to fear the Fed now.
Hey everybody, Payments Professor here, and I want to welcome you to the Payments Podium. And today I'm welcoming Gary Stein to the Payments Podium. Gary, would you say hi to everybody, please?
Hey, Kevin. Hi, everybody.
Gary, I brought you on because I want to have a discussion about the CFPB, who they are, what they do. But before we get to that, one thing I ask everybody who gets on the Payments Podium is, how did you get started in electronic banking? Because I have found in my experience, that's usually an interesting story. It's rare. Only one time have I had somebody say when I was a little kid, I played banker and I wanted to get into electronic banking. Otherwise, it's usually some backdoor route. So what's your story?
It's a great question because both electronic and banking, when I came out of undergrad as an engineer, I think there were a few industries that I thought would be more boring than working for a bank. And I actually joined Arthur Andersen back in the late 80s and worked on government clients that I found were quickly more boring than what I thought a bank might be, but did spend about a year working with the Resolution Trust Corporation, helping write software in the wake of the S&L crisis, which was maybe a good precursor to later in my career. And then when I came out of business school, I think I learned that banking was kind of cool because it was quantitative and everybody touched it. And then once electricity was invented, I moved from regular banking to electronic banking.
I love it. Yeah, it's interesting how we all end up here. You know, so many of us started in one direction and then suddenly here we are. Now, one of the things I know is you've got a background with a lot of regulatory things. And one of the things that I see headlines on all the time, and people are constantly asking, hey, Payments Professor, what's the CFPB? Why are they so important? Some people are like, why are they making me so miserable or my job harder? Can you just give us, to get started, a high-level explanation of what the CFPB is and why they're necessary?
Sure, and I'll tell you, I spent 2/3 of my career not in regulation and just as a banker, but I joined them pretty much when they were created. So if we remember back about 14 or 15 years and the mortgage bubble exploded, it created a need for reform. We had banks going under, and as part of that, in addition to safety and soundness, a professor and now Senator Elizabeth Warren pitched the idea of a consolidated regulator in the Dodd-Frank Act that would be called the Bureau of Consumer Financial Protection, or the CFPB, Consumer Financial Protection Bureau. And it would be the regulator whose first focus, not side focus, would be on ensuring that consumers had protective rights in using financial services, not just in banking, but across the entire financial services landscape. So whether I was going to a bank that for decades, if not since the beginning of time, had steep regulatory oversight, or going to a non-bank payday lender, or a student lender, or a mortgage servicer, I'd be able to have assurance and confidence that there was somebody watching that industry and I'd be treated fairly.
So basically, anybody that moves money, but here's the key, involving a consumer.
That's
so
right.
if they're legally, I should say too, legally moving money, and in most cases, electronically too, that involves a consumer, which a lot of times we hear Reg E gets associated with that, Regulation E.
Yeah, regulation. This is a payments podium. And so Reg E resonates pretty well. That's right. And just to be clear, consumer financial services, not including insurance, not including investment banking or other things there. So if you think about it as what used to be called Main Street banking, and to your point, anything that had to do with consumer borrowing, consumer deposits, and of course, consumer payments. And there's other aspects of that too, like your credit report and debt collection and things that are on the periphery of that as well.
So it's not just a little tiny thing that they do. And I do got to point out, you know, you hear Regulation E nowadays, you immediately think CFPB. Whereas if it's business transactions, that's a whole different world. So it's kind of interesting when you say a consolidated regulator. I wish there was something more consolidated, because electronic banking, when I explained the legal structure to people that are new, it's like, well, are you a bank, or are you a credit union? Are you regional, or are you community? And why does that matter? I was like, because that depends on who you actually have to answer to. Except in this case, every financial institution answers the CFPB when it comes to consumer protection, correct?
That's right. And it's funny that you say that about Reg E, because Reg E existed before the CFPB did. And so this was a regulation, and it's implementing statute, Electronic Funds Transfer Act, that were under the purview of the Federal Reserve Board, that was transferred over to the CFPB. So the CFPB didn't invent Reg E. The CFPB inherited Reg E and has the responsibility for maintaining it. Now, the prudential regulators also uphold compliance with Reg E for certain size institutions, but the CFPB is, the author and the editor of Reg E at this point.
Well, I will tell you too, I think the best thing, my opinion, CFPB did is the way they have Regulation E structured. Everybody can go out there to the CFPB website and see this. They have it structured, and they have the commentary.
Yeah.
They've made it so much easier to be able to read through, to be able to research and understand.
Yeah, you're talking about the interactive regulations, which I think are fantastic. I probably look at them daily. So both practitioners and others out there, but yes, it's a great tool for understanding those things. And one thinks about like the requirements, and there's a whole alphabet, as you know. You mentioned Reg E, there's Reg Z for lending. It is like an alphabet soup. But it's really easy to understand, and you quickly learn, like you said on the commentary, what the rule says and what some of the thinking behind it was. And then there's other aspects where you get in there and you see how sparse in some other regulations, like Reg V, implementing the FCRA, that there's a lot open to interpretation there. And so you get a sense of this is what folks have to work for. I will make one other caveat, Kevin, and that is that there is state law out there too that also governs a lot in the payments world, particularly things related to checks and other things. And then others like the Federal Reserve and the CFPB actually have some joint rulemaking authorities over parts of Reg CC, which drives funds availability. So it's not all the CFPB.
Again, it's alphabet soup once you start talking about the regulatory world. In fact, 3 other letters of the alphabet that I love from the CFPB, I got to love hate. It's the FAQs, because the FAQs to me, I tell everybody, I treat it like what I call a recommendation. It's not a regulation, but it's a recommendation usually that they're coming out with these interpretations. Like there is one for instant payments. There's a FAQ that deals with instant payments. And I tell everybody it's not written into the regulation, but you might as well treat it like it is.
Yeah, I think so. It's interesting how I joined the Bureau, not to make this about me, but I think it's emblematic of what the vision was in the beginning. And that's why they, you bring together tons and tons and tons of lawyers and economists that you would see in a traditional regulatory setting. But there was this idea to bring in people from industry as well to serve kind of a dual purpose of bringing insights into rulemaking. This is how the real world works, and collecting that and being that funnel. And then also to be outwardly focused and saying, okay, this is what the Bureau is concerned about. This is what we're doing. This is why, and helping industry interpret that. And the FAQs, I think, and others are great tools where it's not like, okay, here's the rule. We're going to keep our lips sealed after that. You guys have to figure out what pleases and displeases us and where that is. And I think there's many out there that still think it works that way, especially with UDAP, which is its own alphabet, unfair, deceptive, and abusive practices, and what constitutes abusiveness or unfairness. And while there are regulatory definitions of all those terms, as innovation happens in the marketplace, I think there's open question about, is this in the spirit or not in the spirit? And am I doing this right or not? And so the FAQs are an example of when a new regulation comes up. It says, listen, we know there's this new thing out there. There's real-time payments. These payment rails are being created now, and yet EFTA and Reg E have existed. So how do they apply? And it's intended to provide some guide and light there.
Well, and I like to, I think I even heard the word fluid, the way that they're able to change as necessary with time without having to actually append the official regulation itself and just adapt as things change. Because that's another thing, as I know I've seen it in my lifetime, you as well, we've been around a little while. When we first got the Electronic Funds Transfer Act and Reg E, there wasn't an internet. There weren't, the electronic transactions happening like they are now. So it has had to adopt and change. Even ACH has grown, and now we have FedNow, we have RTP. But something else I wanted to ask you about.
Before you do it, I'm sorry to interrupt you, Kevin. Can I just say something about that? Because that's exactly right. But there is this thing called the Administrative Procedures Act. And so as these things do occur, and the Bureau says, oh, we haven't thought about that, or Congress wasn't thinking about that in the rule, or, hey, these are clearly electronic funds transfers, and we need to clarify them. And you think about lots of innovations that have come about, prepaid accounts, other things like that. The Bureau historically would amend the regulations or make corrections to them or refinements, but they have to go through a notice and comment process. And that is, they would propose something, open it up for the public to provide feedback before they would finalize. And that's a really important, public check on the way rules are made to make sure that they are really thinking about how the markets work. The last 4 years, we've seen rulemakings that don't always use that mechanism, and they go through other means like procedural rules. And I think it's created some consternation in the marketplace because there hasn't been the same opportunity to provide feedback. But, the FAQs, when I was at the Bureau, we put out both for real-time payments and in data sharing, what we call consumer protection principles. And these, as you put it, were not rules, but they were to say, listen, we love where you're going with this innovation. This can really help consumers. As you think about building the house, try to keep these things in mind because we find these to be in the spirit of the consumer protection that we're issued to uphold.
One of the first Payment Professor videos had to deal with those 10 principles. Yeah, years ago, before FedNow was even thought of, there was those principles on what should be considered and the way it should be enacted when building software or payment channels. So I was a big fan of those, still am. And I absolutely love how you pointed out that there's a process, because I've had some people be like, it seems like they just come up with rules when they feel like it.
Well, that's been I'd say a reasonable criticism of this past administration, because they have amended or they've offered interpretive rules, which says the rule's out there, we're not going to change it, but we're going to clarify that this applies to something. And, there's a reason that exists, right? Because if they say, hey, there's been a rule, we shouldn't have to amend it just because the world isn't following it. But there have been other instances where new products have come about. With the consumer protection principles, I give credit to folks in industry that said, listen, we want to build this the right way and we want it to be resilient. We don't want to have to undo things after we've built this. And listen, we're not in the game of harming consumers. We want this to work for consumers. We sit we're the plumbers. You guys sit with the customer-centric or consumer-centric view of the world. Is there anything we're missing? And that's kind of how we got to the point with the principles.
Okay. Something new that's come out I'd love to hear more about is 1033. Yeah. Well, actually, it's not 1033. Some new rules to go along with 1033. Yeah. And what's that really mean? Because, I'm hearing, hey, you got to be able to let consumers have their data. Financial institutions have got to do a lot of work. Or even here in fintechs have got to do a little work. Can you give us the high-level understanding of what that means?
Yeah, so 1033, the number that's used, that actually is a section of of Title 10 of the Dodd-Frank Act, and Title 10. So you think about that. There's 1, 2, 3, 4, 5, 6, 7, 8, 9. Before that was the title that created the CFPB, and within that there's a section 1033. I think they started at 1,000, so it's not like there's 1,033 sections. Was the one that basically said, in very simple words, consumers shall have access to their account data in electronic formats. And that was written back in 2010. So this rule just was finalized about a month and a half ago, 14 years later. And that's because I think over the time, and I work closely on this, how consumers and how industry thought about giving consumers access, what it would be used for, has evolved significantly over that time. So in early days, it might be, a budgeting tool that lets you see your accounts at various different institutions in one place. It could be a way, if you think about how it used to be applying for a mortgage, you bring a shoebox of account statements in to give to the underwriter so they can evaluate your credit worthiness. And now here's a way to say, oh, I can just let you see my mobile banking data and you can see my checking account information without me giving it to you. We see it in the way that money is moved between entities, including between banks and non-bank payment providers like a PayPal.
It sounds to me a lot like you're describing what I know to be open banking.
It is. That's exactly what it is. Sorry, I didn't get to the words you were fishing for fast enough. But it is the mechanism by which consumers share their data, and they don't necessarily get it and say, I want it, now I'm going to give it to other people. They will go in often with a third party who is acting on their authorized behalf to get access to information to help them. And again, this has been happening from the days of credential sharing and screen scraping, and now API and much safer mechanisms. And the rule is really to help provide, again, guidance and infrastructure to an industry that's already operating, and to help ensure, hopefully going forward, continued safe innovation.
Well, and I love it. You said some key words. It is safer mechanisms in place. And it is the fintechs, the third parties working with the financial institutions.
Yeah.
It is when you have multiple financial institutions, and it's all really to benefit the consumer at the end of the day, because things get, fragmented all over the place. And we want to be able to consolidate and make it easier for people. So I'm a big fan of this role. I can't say I've always been a fan of everything CFPB did, but I think this is a huge new movement for them.
I think people should be fans of open banking. And I think, I worked my mic drop moment with the CFPB was writing the advance notice on proposed rulemaking and the consumer protection principles before that. And some of my good friends and former colleagues helped to put out the final rule there. Industry, the Bureau is being sued over the rule. It's such a complicated concept, right? Because you're talking about data that doesn't always exist in one state. There's all sorts of privacy regulations. And so banks and others have to make sure our data as consumers is kept safe and secure. But now they also have to share it whenever we say. And so I think there's a lot that had to be thought through, and a lot, that somebody could pick at. But the concept of using your data to be able to provide better access to making payments, better access to, getting access to credit. I think one of the things that the initial authors of Section 1033 and this last administration of the Bureau have been focused on is account portability. And, the thought that if consumers can move their accounts more freely from one bank or provider to another, that might force greater competition on who protects and takes better care of the customer. Whether or not we're at that stage in the marketplace, of true portability is a question, but I think that was the interest there.
As somebody in the industry who has had to actually move accounts, I got to tell you something that happened to me was in moving the accounts. I didn't find it very difficult because I knew what to do. But by the time it was done, I would have rather had a root canal.
Yeah, I'd like to say I know what you mean, but I don't know that I've moved an account in many years. And I think somebody was just quoting a stat that said the average consumer holds on to their deposit account is 10 years, like 17 years. One of the challenges that makes account portability still, I think, a future aspiration for many consumers is that we are not in a world of ubiquitous and complete real-time payments, right? So if I write you a check or I tell my utility company to debit my account, right? At any given point in time, when I say I want to stop this account and move everything over there, there could be any number of dozens of payments in transit, either that have been authorized and not settled or authorized and not even originated yet. And so for many consumers, the concept of account portability means not only moving over all these payee and payor relationships, my direct deposit, my auto loan, all these other things, but it's also, I can't close this account until I've moved all those things and all the payments have settled. And so it forces someone to keep a little bit of cushion in two different institutions. And that's hard for some people to afford to be able to do. Real-time payments will help with that, but and 1033 will help with that on top of real-time payments. Yeah. Yeah, so that rule that came out very recently, the larger participant rule, it was a little different than some of the other types of rules we were talking about before. That rule basically states that the CFPB has the authority to go in and conduct a supervisory audit of these large non-bank payment providers. Uh-oh. I think we just lost Kevin. All right. All right. So yeah. I say okay. So that rule that you're talking about is a little different from the other types of rules that we were just talking about, and that was a rule basically to officially draw a line in the sand for where the CFPB's supervisory authority sits as it pertains to non-bank payment providers. So just to be clear, these companies that would be implicated by that rule, the PayPals, the Amazons, Googles, or whatever, Apples, whoever, um, they are already providing consumer financial services. So already obligated to follow consumer financial rules and regulations and laws and provide, like you said, Reg E compliance and things like that. This rule, though, doesn't provide new regulatory obligations for them, but makes them subject to the CFPB's supervisory authority. When the CFPB was created, they instantly had supervisory authority, which means the ability to knock on the door, go in and conduct an audit or an examination. Okay. And if you think about like It's a Wonderful Life, and when the bank examiner was coming in and they needed to get the cash together because they were going to be found short. That's what a supervisory audit is. And the CFPB could do that on day one for all depositories, banks and credit unions, 10 billion and above in assets, on all payday lenders, all private student lenders, mortgage servicers and mortgage originators, and there's probably a couple of others in there that I don't have the exact list on. But for any other provider of consumer financial services that wasn't below like that $10 billion threshold, sorry, my dog is gone. The CFPB would have to make a determination about one, whether there are both large and small players in that marketplace. And then two, with the expectation that having to um, submit to a supervisory examination is somewhat burdensome. They'd have to draw that line so that they weren't putting undue burdens on small entities. And so, what they just did in the non bank payment space is propose where that cutoff line should be drawn between non bank payment providers of large scale and below. And so, that rule going forward then grants the CFPB the ability to go in and examine those entities.
Okay, I think that's important. I really think that that line might need to drop a little lower, even because there's so many entities that are out there. And for me, it's just the foundation of where we will see more for the. I like how you said it, the non-bank players in the sandbox here that are doing all this movement for them. Okay, I got one last question for you though, and that is, when I met you earlier this year, it was a friend of ours, a mutual friend, Norman Robinson, happened to be there. Norman is somebody who's been very near and dear to my heart for years. I worked for Norman for a very long time, and he was an incredible mentor to me. If you were to right now mentor somebody, if you were to give somebody advice on what they should do to have a career like Norman's or like you've had to be successful in this industry, what advice would you give them?
Oh, that's a wonderful question. The world of payments is happening so fast. First of all, I would try to counsel them out of saying, don't think of banking and payments as boring. This is exciting work. And, I don't care who you are, if you are an individual or the chairman of a Fortune 10 company, how money moves in and out of it is very integral to your lives. So look at it as a career. And then I think I've been very fortunate. I've been at a fintech, I've been at a bank, I've been a consultant, I've been a regulator. And so I feel like I've had a 360-degree viewpoint of that. I would tell people, don't worry about early in your career of being this one person. I would say try to give yourself as many experiences to that, because everything provides a new line of sight into what you're doing and helps you to see how the other stakeholders in the market, think about their role. And, if you really want to innovate, like I think I did as, again, a banker, as a regulator, as a fintech person, you have to work with these other stakeholders. And that's the best way to create the rails. The last thing I would say is, go to a place where you really respect and can learn from the people you work with. I have always found that it's maybe less important what my job is after those first 2 points, and less important who I'm doing it for if I'm working with great people that are going to teach me things. And I find that that's also where I think having the greatest job satisfaction comes from, is feeling like you're part of an all-star team. And that's driven my career moves and certainly driven my latest one.
Oh, Gary, that's amazing advice. I mean, I love you've opened our eyes on what the CFPB is, some history there, the procedures they go through, like the Administrative Act procedures. I love being able to hear that, enlightening us on what's happening in 1033. And then, of course, I love that advice too. Payments is exciting. It's also, it's more, it doesn't, you don't have to lose $1 million for it to be exciting.
No, I hope not.
Everything works.
That would be a high cost of admission. I hope it doesn't come to that.
Well, unfortunately, in my regulatory days, because I did a lot like you did, I've worked in different parts of the industry, and I think that everybody should, because it does give you that exposure. So I'm grateful for you being here today. If somebody wants to find you, they can go to LinkedIn and be able to find you out there.
I'm on LinkedIn. That's exactly right. And I don't know if you'd like me to give my contact information.
Go right ahead.
Sure.
Go right ahead.
I can be reached at gary.stein@accenture.com as well. But I have LinkedIn up on my other screen right now. It's something I look at regularly, but I also get emails. And if I can be helpful, please let me know.
All right. Well, thank you for participating today, Gary. This has been so enlightening. For all of you out there that are watching or listening and thinking, hey, there's a topic or a speaker you'd like to see on the Payments Podium, all you got to do is send an email to kevin@paymentsprofessor.com. I will do all I can to make sure that that topic gets answered, that speaker gets on the show and gets to give their view, or, well, whatever else you ask that's within reason, of course, folks. Some of these requests are a little crazy, let's just be honest. But I'm here to help whenever I can. But for today, this is where I say, class dismissed.
There's a world out there, it's a digital maze where dollars move in mysterious ways. Complex systems, rules, and regulations. The payments professor sparks revelations.